Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. As you know very well that banking institutions are there in order to accept deposits from the public, and the main function of banking institutions is to lend the money. They are not there to just keep the money. They are there to primarily accept money from the people who are having surplus funds and then utilizing these funds in order to lend to the needy. The needy may be businessmen, individuals, or any other person. It may be given for, as we have already discussed, it may be given for the purpose of home loan, industrial loan, business loan, even for education loan, and various other types of categories are there. We have already gone through those, like bill discounting, like overdraft, CC limits, and all that. And you are already aware that as per Banking Regulation Act also, banking is basically concerned with accepting deposits and then lending this money to the public. So it should be kept in mind. So that is why we may say, like, acceptance of deposit from the public is an essential element. Similarly, lending is also the primary function of a bank. So, and it is a very popular means, and banks are there in order to lend. And you should note that on the basis of lending money to the needy, on that base only banks will be earning something. What is that? That is basically interest. And in order to be profitable, banks should be earning more interest than the amount of interest that is to be paid by the banks to the persons who have deposited their money with the banks. So in lending is the most important activity, we may say, as by lending banks will be earning interest, and out of that income banks will be you may say paying interest to the depositors and meeting all the expenditures relating to conduct of business. So it should be kept in mind. And moreover, it should also be kept in mind that when lending will be there. Suppose a person needs money. So in case banks are providing loan to that person. So it will be used by that person in some productive way. It might be used for some commercial purpose in order to create some business, and ultimately it will prove to be productive for our society, and it will be very beneficial for us. And ultimately it will be utilized in a better way, and ultimately it will create employment opportunity, resulting in improvement in the standard of livings of the people. So it should be kept in mind, and it is the most important function as far as a banking institution is concerned. But it should be a profitable venture. When banks are providing money to someone, so banks should be earning something out of that. In case banks are just losing their money, it will not be good. So this should be kept in mind, and various provisions have been framed by various policies have been framed by RBI that is required to be complied with by the banking institutions. These are required to be kept in mind by banks while providing loans to the needy persons or the borrower. So RBI has done a lot in this regard. But still, out of nowadays, a lot of competition is there. So more and more banks are there. So there may be some issues that some bank is providing loan at a lower rate within the limits, no doubt. But competition is there. So in order to survive, in order to grow in the market, various factors should be kept in mind by the bank. In case they are charging a higher rate of interest, then the prospective buyer will move to some other bank that is charging a comparatively, you may say, lower rate of interest. So it should be kept in mind. Then rate of interest differs from the purpose of loan to purpose of loan. So it should also be kept in mind. Again, time duration matters. Time duration matters. All these points should be kept in mind. Now, one thing that is there that you should keep in mind, my dear student, that is what are the factors, what are the, you may say, factors, what are the considerations that should be kept in mind while giving loan to an individual, to an institutions. So, what are the principles of lending? Let us move forward. As far as basic principles of lending are concerned, a number of principles are there, but you should keep in mind a few principles like safety, liquidity, security margin, and profitability, purpose, then diversification of risk. So these are the basic principles. A part of them, a part of these number of factors may be there. We are not here to ignore those, but these are the basic principles, as I have written, of lending that should be kept in mind. Like whenever you will have to judge that who is your borrower, and you should at that particular time, at that particular period of time, you should keep in mind the character, the capacity, the collateral security being offered by that person, so that institution. So these should be kept in mind, and various other things. So these are the some basic requirements that should be there, that should be kept in mind. So let us discuss these one by one. So my dear students, first of all, we will be having the first principle, we may say. Let me show you. The first principle may be safety of money. So first is safety of money. Now, I have told you on various occasions that bank is there. Again, I am telling what is the main function, what is the primary function of bank? That is to accept deposits from the public and then to lend it to the public, to institutions, corporate houses, and all that. So, as the money that bank is lending, the money that is to be lent by the money belongs to public itself. So it becomes the main duty, it becomes the first and foremost duty of the bank to ensure that the money is in safe hands. Money is in safe hands. Various factors, like I have already told you, character of the buyer, capability of the buyer, these should be kept in mind, and it should also be ensured rather that the borrower is able to repay the loan. The principal will be returned and the interest payment will be made from time to time as per the, you may say, as per the agreement, as per the contract. And interest as well as principal, they will be coming back to the bank without any chances of default. So it is required to be insured by the bank itself. Now, safety, as far as safety is concerned, the bank should keep in mind, I have already told you, character of the borrower, capacity of the borrower, his capacity, his capability to do the business successfully, his capability, his capacity to pay back the loan. Then the main thing is his or her willingness, the willingness of the borrower. It may be individual or even some corporate house company, their willingness to pay back, that is also very important. And the collateral securities that have been offered by those persons should also be kept in mind, and it is also very, you may say, significant. The asset may be given by the person, then in that case we will have to see that those assets, those securities are marketable, those securities, the price is ascertainable, that is stable, and that is transferable. The clear title, the borrower should be having clear title over the collateral security given by him or her to the bank. So it should be kept in mind. And bank should also ask for some collateral security from the borrower. And these things are required to be ensured by the banking institution itself. In case some individual is there, then his character, his goodwill, his reputation in the market, his ability to do business, his willingness to pay back the amount. All these things should be clear. All these things should be ensured by the bank to a large extent. Only then bank should move ahead. Now the next part. Now the next principle, that is liquidity. That is liquidity. Now, what is liquidity? What is liquidity? Dear students, kindly note that as per the definition of the banking, I have already told you that bank deposits are repayable on demand or at a short notice. And in case a person wants back his or her money, so bank in that case banks can't refuse. Rather, banks will have to pay. Banks will have to give that amount to the depositor. So it is the duty of the. It is first and foremost duty of the banks. So you should be now see the position of the bank. Now banks are there. Banks must ensure that the person to whom they have given the loan, he is able to repay the loan with interest, and similarly, so that money is flowing, money is there with the bank, and bank is in a position to give money, provide money in case it is demanded, in case it is required by the, you may say, the depositor. So it should also be kept in mind, and that is why you may say that is why infrastructure loan, that is why infrastructure loan, that is a loan ranging from 10 years to 20 years. Such types of loans are not given by the banks. So like safety is important, in the same way liquidity is also important, and it should also be kept in mind that I have already told you that the goods, that the security should be marketable, and like various things, like you may say fixed assets, that things, that type of assets are not easily marketable. And liquidity, no doubt liquidity is there, but it is not so liquid. It will take time to convert that into cash, so it should be kept in mind. Now, dear student, next comes security margin and profitability. Now, what is the meaning of security margin and profitability? Kindly keep in mind that banks are there. Banks are there in order to earn something. Banks are there. Banks are just like some other commercial organization. Now, the main aim of any organization is to earn something, is to have profitability, to earn more, to earn a maximum. So that is there, that should be kept in mind. So reasonable margin should be kept against the security given by the borrower. It is very, very important. I have just mentioned that banking is also a business. Banking institutions, banks are basically commercial organizations, and they will survive. Banks will survive only in case they are able to earn more and more profits. So only in case they will be earning profits, only in that case they will be able to survive in the market, in this cutthroat competition, competitive world, and to save something, to plan for the growth of the bank. So these are the things, and I have just mentioned that banks earn their the major source of their income is the interest on loans, interest on advances. That is the main source of their income. But on the other hand, number of expenses are there that is required to be borne by the banks. Like interest is earned from loans. In the similar way, interest is required to be paid on deposits. It may be FD, even on saving bank deposits. Some amount, nominal it may be, but it is required to be paid. Then various other expenses like salary, like rent of the premises, like stationery, and various other things that is required to be paid. So, in order to pay for such expenditure, such expenses, so banks should be earning enough so that they are able to meet this amount. So, similarly, one thing more is there, that banks are not there to charge anything. Banks have to travel within the limits. Banks have to travel within the limits that have been, you may say, that have been prescribed by the RBI. RBI, that is the main, that is the primary apex body in case of banking in India. But various types of freedoms are also given to the banks, and banks must travel within the framework provided by these things. Like, in case some very reputed companies there, so bank may think of charging some low rate of interest, as it is secure, and business is good, and banks will be having security. So this may also happen. So banks should be keeping such things in mind. Then comes the purpose of the loan. Then comes the purpose of the loan. It is very important factor. You see, while granting loan, while providing money as loan, while giving advances, it should be clear to the bank that what is the purpose for which that amount will be utilized by the borrower. So it should be clear what is the purpose of the loan. So it should be kept in mind. Various banks, they don't give money for unproductive purpose. First of all, they will be ensuring the safety, they will be ensuring the liquidity of the amount that they are giving by way of loans. So they will be giving loans for productive purpose only. They will not be giving loans for unproductive purpose. They will not be providing money for gambling. They will not be providing money for speculation. Yes, in case you need money for expansion of the business in order to meet day-to-day requirements of the business, then yes, a bank will definitely be providing money for these purpose to the companies. But for other type of purposes, like for gambling, horse racing, speculative activities, unproductive activities, then banks will not be providing you the loans. It should be kept in mind, and bank will keep in mind the period of loan in their mind. And in case loans are used for some productive purpose, it will be good for the banks, it will be good for the society, and it will be good for the nation as a whole, as employment opportunities will be created and all that. Now the next principle is a diversification of risk. In this case, you must think that it is based upon the principle of don't put all the eggs in one basket. So that is the basic fundamental rule behind this principle of lending. That is diversification of risk. It means diversification should be there in order to spread the risk. It will be. It is basically cardinal principle of lending. It will be very helpful in spreading the risk. One thing that you should keep in mind, that the borrower should be selected very carefully. Security should be there, but apart from them, diversification of risk is also very necessary. Now, what is there in case of diversification of risk? In that case, you may say that you should not be giving loan to any one industry only. You should be giving loan to a maximum number of industries, so that in case there is some slump, there is some, you may say, recession in one type of industry, so other industries may be doing well, and you will be getting the money. So it may happen. So similarly, you should avoid giving only one type of loan. Rather, you should be trying to give maximum types of loans. So diversification is very much necessary. Diversification is required, and when you will be giving loans on the basis of nature of industry, so maximum type you should be covering. It should be kept in mind, and on the basis of that you should be providing loans. So dear students, I think it is clear to you. You might have understood it is very important to provide loans And while providing loans, while granting loans and advances to the borrower, number of factors should be kept in mind. Number of factors should be kept in mind, and we have discussed all these principles in detail. All these principles should be kept in mind while granting loan to the interested party. And when some individual is there, as I have already told you, his credit worthiness, his character, his capacity to do work, you may say technical skills, his past record, the land he is occupying, nature of business, and place of business, all these matters should be kept in mind. But then it should also be kept in mind, it should also be taken into consideration that banks are using money that has been deposited with them by the public only. So it is their first and foremost duty to safeguard the amount, safeguard the deposit of the public. The money is not bank's own money. It is the money that has been deposited on which bank is already paying interest. So bank should be extra careful in providing loan. Otherwise, it will be against the principle of you may say common good. Bank should try to get maximum information from the market, from the Credit Information Bureau. CIBIL score is there, and all these factors should be kept in mind while giving the loans. And in case some doubt is there, so in that case bank may even refuse to grant loans on some basis, on some not some you may say filmy basis, but on some solid basis. Your bank may refuse to provide the loan. Otherwise it will become NPA. Otherwise it will become non-performing asset, and I think you are already aware that a number of banks are suffering from such thing. So it should be kept in mind. So, dear student, this was all from my side as far as principles of sound lending are concerned. Okay, then, thank you.